Do you know the Malaysian retail industry has been one of the largest contributing sectors to the country's gross domestic product, GDP, for the past decade? Several national and international brands have been performing in the country with a broad range of retail outlets across the nation. Despite several new store launches and a broad network of stores, the retail industry has registered a slow rate during the study period, which was drastically dropped during 2020 owing to the COVID-19 pandemic. Hello JNSF, Sales and Marketing Professionals. If you don't know us yet, we run an e-business blog where ambitious professional like you meet and greet. To continue, believe me, the Movement Control Order, MCO, restricted the public movement, and the lockdown, which was originally expected to last for 2 weeks in March 2020 and extended to mid-May 2020, has resulted in a sudden drop in total revenue generated from the retail sector. Unfortunately, this sector contracted by around 16% in 2020. Some of the retail segments recorded a great contract, including double-digit contractions during 2020, which includes apparel, footwear, fashion accessories, and others. Similarly, one of the largest distribution channel segments, the hypermarkets, supermarkets, and convenience stores, recorded a drop in the total sales generated. One moment please. Before speaking another word, may I introduce myself as Madam Sophia, the virtual assistant to CTM Joseph NG, your sales and marketing e-coach and e-mentor. Alright, without further ado, here is this week's Red Hot News. Red Hot News. Year-end festive boost for retail recovery. Petaling Jaya, Real Estate Investment Trusts, REITs, will continue to appeal to investors due to their attractive yields amid the current low interest rate environment. The sector is also seen as a recovery play as it is poised to benefit from the expected rebound in Malaysia's post-pandemic economy. Based on Amlinvestment Research's, Aminvest, estimates, the 4 REITs under its coverage, IGB REIT, Pavilion REIT, Sunway R under its coverage REIT and YTL Hospitality REIT would provide distribution yields of more than 3% for 2023 and beyond. The brokerage maintained an overweight call on REITs. Its top pick for the sector is Sunway REIT, with a fair value RM 1.66. Citing the fund's diversified investment portfolio, which includes retail malls, hotels, offices, plus a university and hospital, sustainable townships, which create resilient footfall and traffic for its malls, and the large pipeline of potential assets for future injection. Aminvest said it remained cautiously optimistic on the recovery of retail REITs while we foresee a bumpy recovery in the immediate term, dragged by the emergence of the new Omicron variant. Earnings visibility and associated risks of the sector have now improved compared to the earlier quarters thanks to the wide rollout of vaccines both locally and globally, together with the reopening of domestic economy in stages, it explained. Aminvest noted the REITs under its coverage have now seen their footfall traffic recover up to 80% to 110% of pre-COVID levels. Marketing activities such as promotional campaigns and exhibitions have resumed to attract the return of consumers as the festive season approaches. The recovery, however, is observed to be at a slower pace compared to last year, partly due to the slower reopening of economies as COVID-19 cases remain high at above 4,000, it said. In terms of financial health, Aminvest noted these REITs continue to maintain a healthy debt-to-asset ratio of 23% to 41% versus 60% of the regulatory threshold, which allows the gearing up for further acquisitions. Most of the companies under our coverage have guided that they are actively scrolling for quality assets and do not rule out potential acquisitions over the next 12 to 16 months if any ill-deserved propositions emerge which could drive the REIT medium-term growth despite short-term earnings pressure, it said. Meanwhile, UOB High-End Research, UOBKH, is also overweight on REITs, noting the sector still commanded attractive yields compared with fixed income instruments in the current low interest rate environment. Moreover, the brokerage said, 2022 earnings growth of 31%, coupled with the current depressed valuations, implied that the market had largely priced in the negative impact of the lockdown. As Malaysia reopens its international borders, we expect earnings to recover, starting with tenant sales as the economy opens up. However, rental reversion will be minimal in an effort to protect occupancy, UOBKH said. The high-yielding and COVID-19 resilient office REITs offer better interim gains via dividend yield compression. However, in the long run, we continue to prefer the retail segment, particularly prime and niche malls, for their proven business resilience, it added. End of Red Hot News. Extracted and modified from printed open sources dated February 5, 2022. By the way, are you pleased with this week's bulletin? I hope you do. As for myself, it is very informative. You ask why? These facts and figures show all parties in the retail industry must be willing to find ways and means to sustain the retail biz. Again, we, who are retailing, sales and marketing professions, should request all involved parties, including manufacturers and distributors, to assist directly and indirectly to give a helping hand to all big and small retailers. It will certainly help our Malaysian retail market great again. In truth, together, we as retail business professionals can certainly help each other and our country to progress, even during the MCO, COVID-19, and other difficult periods like the recent disastrous floods. Get my drift? P.S. Please give us a thumbs up. Also do subscribe to our channel, so you would not miss out any of our practical and useful video clips. We need your feedbacks to help us to help yourself. Fair enough? PPS, as you have faithfully read and viewed this clip to the last, here is a free bonus for you. In the next clip you are invited to weekly view free chapters from the book, How to Prospect for Your Ideal Customer. It will be delivered by Madam Florence, another virtual assistant to CTM Joseph. Okay, thanks. Hope to meet you all again with more news and views. Goodbye for now and thanks.